Welcome to the Rogue Trading Communities video, and this video is about the volume waves, also known as cumulative volume waves actually. So volume waves, this is kind of like an indicator which is already released with our volume spread analysis version 1 indicator in TradingView. So if you don't know how to apply the indicator, just go to the YouTube channel and you'll find the previous video, and link will be in the description for the indicator video. So in that particular indicator, there's an option called volume waves. So what is this volume waves and how you can use this volume waves with volume spread analysis? That is something that we'll be looking into this video. Now, first let's understand what is volume waves. Volume waves is also known as cumulative volume waves, is an indicator used to identify effort versus result by calculating volume on higher highs and lower lows to determine the strength and weakness of the dominant traders of the market. In simple, let's get on with first the basics of waves first. Okay, so if you are a fan of Elite waves, then this might be a little bit related to it. So let's get started with it. Now, all you have to realize that every single wave is created by both buyers and sellers. That's something that we know. So it could be a trend towards the higher highs, or it could be a trend towards the lower lows. So every single wave is created by buyers and sellers, right? So it is created by traders out there. Okay. So now you have to realize in one particular wave, let's say there are two types of waves that could be counted right here. One is the impulse wave and one is the corrective wave. So what is an impulse wave? Impulse wave is a set of 5 waves. So 0 to 1, 2, 3, 4, 5, right? So this comes as 0, 1, 2, 3, 4, 5, right? So obviously after 5, that comes a corrective wave in terms of A, B and C, right? So then the cycle continues on, so on, so based on like corrections, different types of corrections and so on. So it continues in Elite waves actually. So when it comes to this 1, 2, 3, 4, 5 and ABC right here, so what you can actually consider here, first thing you have to realize is that every single from 0 to 1, okay, this particular momentum right here from 0 to 1, it is a up move, right? So this up move is created by who? Buyers or sellers? Obviously buyers. So the buyers were dominant right here. That's the reason you got a up move right here. From 1 to 2 right here, okay, this particular move right here, from 1 to 2, okay, from 1 to 2 right here. When it comes to 1 to 2 right here, so who would have created this particular down move right here? Who would have created this correction right here? That's the sellers, right? So market came from high to low right here. So obviously sellers. So every single up move is dominated by buyers and every single down move is dominated by sellers. So this one particular basic you have to realize when it comes to volume waves. Okay. Now let's get back to the charts and let's see how volume waves are actually been, how you can use volume waves in the charts. Okay. Let's get back to it. So now we are in the TradingView terminal and it's the Oro Pharma 1 hour time frame. Okay. So now in this particular chart, I'm going to show you how to use volume waves. Okay. So before finding the how to use applying volume waves, you have to realize this particular volume waves can be useful to identify retracements in the markets, right? Effective retracements. So if you are a price action trader, you would have realized, like market is going on a higher highs and you got a particular resistance or a support and you're waiting for a retracement right here. So if you're waiting for a retracement, you want to take a trade on that particular retracement and you don't know whether that particular retracement could be, could hit your stop loss or it could, actually hit your targets. There's only two possibilities right here, right? So now this volume waves can actually give you a little bit of confidence, okay, to understand what's happening in the market. So that's the reason we use volume waves just as a reference. I don't say you have to dependent on this, but you just have to use this as a reference. That's it. Now as I can see right here, okay, fine. So as I can see, if I'm zooming in right here, so we have a kind of a structure break right here. I was observing this, but I didn't take any trades right here. So if you know how to draw channels, so obviously the students know about it. So if you know how to draw channels, okay, so yeah, perfect. So as you can see right here, market was in a trend channel for a while. Actually, it's been supporting the 50% reference as much as. So now as you can see, market broke towards the lower lows right here and got a retracement, and based on that, market went up, and you also got a little bit of signal of weakness at the breakout right here. So signal of weakness indicates further down move right here. So based on that, you could have actually taken a trade, which is a really good trade. Wow. Okay. So anyways, let's get back to it, and let's say that you got a breakout. So a lot of traders out there were confused, sir. Like let's say if this was the particular setup, then you could have taken a trade. So actually, as per price action, obviously this is the how people take the trade. But you have to realize that even structure break can actually be effective in the markets. So in this particular scenario, what happened right here, market was in a particular range. It was supporting the 50% levels exactly. It was perfect. Then market broke right here. And as you can see right here, we are getting an increased volume. This is indicating signal of weakness right here. Exactly, market broke these levels. This is indicating signal of weakness, stating that market will continue. The chances of market to continue downfall is higher right here. It doesn't mean that market will go down. The thing is, it's just a probability that chances will go down. But to confirm that probability, what we can actually do is to draw a level right here. Okay, draw a level below the levels, and you got some breakout right here. Perfect. Okay, so as you can see right here, market created a weakness right here. But if there was weakness, okay, if this was a false weakness, what would have happened? Market would have held these levels and market would have created a higher high. But no, market came down and then broke the levels properly right here. So now market finally broke these levels and you got a retracement right here. So based on this particular retracement, you could have judged that, okay, fine. So now market could fall towards the lower lows right here. And based on that, I want to take a trade right here. But how to confirm this particular retracement is valid or not? That is something that we'll be learning that. So for this particular retracement, you have to apply the volume waves. So now you have to go to the indicators. You know how to apply this indicator. If you don't know, link will be in the description for the indicator video. Go ahead and watch it. So I'm applying this indicator right here. So as you can see, this is how the default indicator will be. Okay. So right here, you don't need all these VSA signals right here. VSA signal is only for you, let's say a beginner VSA trader. Okay. Just to have a reference. That's it. But apart from that, you don't need that. If you're scrolling down in the settings right here, you can see this particular thing, show volume waves. This is what you will be applying right here. So if you're applying volume waves, it is showing you every single lower lows and higher highs. It is calculating every single lower lows and higher highs right here. So based on that, you can know every single swing right here, how much volume they have occurred within this particular swing. That is what volume waves are actually showing you right here, right? That's what volume waves are actually showing you. I hope you can see this because the numbers are pretty much smaller right here, because I have kept it like this, because if you're zooming out, I don't want this particular numbers to be big. So that's the reason. And yeah, obviously I'll be developing this in the upcoming days also. So I'll be improvising the indicator again and again. We'll be adding more and more features. But currently, this is how the volume indicators work. So as you can see right here, how to use this particular indicator, that's way more important. So right here, I don't see any clarity right here. But I'll show you the clarity in a smaller time frame right now. Let's go to 30 minutes actually, because we were in 1 hour. We should go half of it. Okay. If you're watching 10 minutes, you should go for 5 minutes. If you're watching 15 minutes, then I would also recommend 5 minutes actually, because there is no half of 15. So anyways, okay. So as you can see, this particular volume waves as it's showing you right here. So when market came back for retracement, so this particular numbers of volume waves were already there, right? So obviously market created this lower low and higher high, and every single time you're getting the volumes right here. So if you observe carefully observe the numbers right here, right? Carefully observe the numbers, where these numbers indicates the volume of that one particular swing right here. It could be higher higher, lower low. Every higher high it is indicated as green, and every lower low is indicated as red. Now as you can see right here, now from this particular point onwards, as you can see, market from 499 to 305, 305 to 367, the buyer's strength, the higher high strength right here is decreasing right here. The lower low 721, 268, yes, since market is in a sideways phase in this particular phase right here, it's absolutely fine. But once it got for a retracement, you have to compare it right here. So as you can see right here, from 37 to 247, but here from 36 to 357, and again from 367 to 167. So right here, as you can see right here, from 357k to 167k, from 167k to 118k, and it's reducing right here, and as well as the increasing in sellers move for the down move right here. Okay, the down move volume right here is increasing right here compared to the higher highs volume right here. So you can understand the effort versus result right here. So you, based on the effort versus result, so effort is the volume and results is the volume price, right? So effort is the volume and result is the price. And as you can see right here, you are getting this much of volume, but at the same time the volumes are reducing on the higher highs right here. So this can indicate that the buyer's particular strength, or there is an anomaly in the market, and based on that you can get a little bit of confidence right here. You can take that as a reference to take a trade, but this is not the sole thing that I use it actually. So I use especially demand and supply divergence, right? So I see what's happening based on demand and supply, based on the most important liquidity part of particular market, and based on that I judge the market whether I want to go for a buy trade and a sell trade. But this can actually give you an idea of how you can actually take a trade. For clear information, let's go do one more example and let's see how things were working right there. Okay, in terms of intraday. So now we are in the Nifty chart. Okay, this is a 10-minute time frame actually. So for a lot of traders out there who are looking for intraday kind of view, so this is for you guys. So this is how I personally use this particular volume waves. So as you can see right here, I have drawn some resistance right here. This is one of the personal trades that I have taken previously, but I'm showing you how I have taken it. Simple. There was kind of like levels right here. So I was expecting a retracement and got the retracement. So there were demand and supply divergence and everything was happening. But for a reference, I looked at the volume waves right here. Okay, for a reference, I looked at the volume waves. This 10-minute time frame, same thing. I just applied the volume waves right here. So in this particular volume waves, it is not much of a clear. Okay, so let's say what you can see right here is 922 to 1 million, 1 million to 241. Yes, it's a little bit divergence right here, where every single higher high, the volumes are reducing right here. And right here on the lower lows, I don't see much of a confidence right here, because from 476 to 130k. So I don't see much of a confidence right here. So what I do in this particular case is I go for a little bit of smaller time frame, right? So to magnify the view. Now, this is the 5-minute time frame of the same chart, same time frame, same way. So as you can see right here, now from this particular point onwards, as you can see, from 274 to 610, immediately you got a higher, huge volume. Obviously, you got a effort versus result was on top right here. You got the volume as well as the momentum. But at the same time, as you can see, if you have to compare it, you have to compare the whole volumes from 610 to directly a drop of 241. And right here from 77 to 225. This actually gave me a confirmation saying that, okay, there is a little bit of effort versus result anomaly right here. And based on that, that gained a little bit of confidence on me. And there was a no demand followed by a confirmation bar. And there were, like multiple confirmations of volume profile, market profile, and every single thing. So based on the multiple confirmation, I had taken this amazing trade, and it was amazing. And as you can see, even after continuing from 241 to 150k, from here from 225 to 538. So the lower lows volumes are increasing right here and higher highs volumes are decreasing right here. This is also a continuation signal when it comes to volume waves. So you don't have to apply this particular volume wave indicator throughout the session. Just whenever you have a confusion, whenever you know that this particular retracement is kind of like what you can say is valid or not, if you get that particular doubt, you can use this particular retracement indicator right here. Okay. So after that particular momentum, we bagged literally like 144 points right here. So based on, again, I think I exited around this particular point after seeing a huge volume, and I think there was a kind of like a resistance, kind of a support right here. So based on that, market started holding this, and I exited halfway, but I gained more than 1:8. That was absolutely crazy, amazing. So that was how the particular trade went, and it was amazing. And this is how you can use this particular volume wave indicator in your trading life. And don't be dependent on this indicator, because this is just an add-on, that's it. Okay, I don't really depend on this. There's nothing more to talk about this. But yes, there is a similar indicator called mbox wave and so on, which we use in NinjaTrader 8 actually with Trade Guider. But in that particular indicator, it shows the delta values actually. So in delta values, it shows you my negative and positive and so on. So based on that, you can identify buyers and sellers strength and weakness very effectively. But this is the simplest version of mbox wave. That's what I can tell you. So that's it for this particular video. If you have any questions in this particular video, or if this particular indicator, you can either message in the WhatsApp, or you can comment in the comment section, and definitely I reply regularly to each and every subscribers out there. So go ahead and place your doubts out there, and I'm sure I will assist you with the same. So that's it for this video. Thank you so much. We'll see you in the next videos. Goodbye.